Oil just crashed 2.5% and the crowd is in full panic mode. But here's what they're missing. 75.45 is a liquidity trap. The algos are hunting stops below that level before the real move begins. But here's what they're missing. 75.45 is a liquidity trap. The algos are hunting stops below that level before the real move begins. Oil just settling at 76.03, and the crowd is running for the exits like this is 2020 all over again. But here's what the herd doesn't understand. This sell-off is setting up a liquidity trap that could catch 90% of retail traders wrong-footed before the next rally begins. There is one danger zone and one hidden opportunity right now. I'll show you both. We are at a critical inflection point where the daily structure is screaming sell, but the weekly and monthly trends are neutral. That tension creates volatility, and volatility is where traders make money. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Let's break down exactly where the smart money is positioning as oil tumbles towards 75.45. Session bias, trending downside but approaching a critical support zone that could spark a violent reversal. We are not in a free fall, we are in a controlled descent toward a major liquidity pool. The single invalidation level that flips this entire structure? 75.45. Write that number down. If we break below 75.45 with conviction today, the entire daily structure resets towards 72.87 and potentially 70.30. But if that level holds, we are looking at a squeeze that catches every late short off guard. The herd is positioned net short. The sentiment reading is overwhelmingly bearish. Retail traders are piling into puts and short futures at the worst possible moment, chasing the move after 2.5% of selling has already occurred. This is classic exhaustion behavior. The ADX at 45.7 confirms strong trend momentum, but the RSI at 41.4 is nowhere near oversold territory yet. We've got room to run lower, but the risk-reward on chasing this move is garbage. Write this down. 75.45 holds, we squeeze. 75.45 breaks, we accelerate lower. That's your line in the sand. Let's navigate the chart from weekly down to the 5-minute and see exactly where this structure breaks down. Starting with the weekly time frame, this is where the big picture lives. Price is trading well below the weekly MA200 at 82.52, which tells me we are in a bearish structural phase. The weekly trend is a strong sell, confirmed by the ADX reading above 40. But here's what most traders miss. The weekly MACD is showing a massive negative reading at -4.82, but the histogram is flattening. That's a potential sign of momentum exhaustion. The weekly support zone between 72.87 and 75.45 has held multiple tests over the past 2 years. This is where institutions start covering shorts. Now let's drop to the daily chart. The daily trend is also a strong sell, and price just broke below the daily MA5 at 75.06 and MA10 at 74.85. Actually wait, let me correct that. Current price at 76.03 is actually above both the MA5 at 75.06 and the MA10 at 74.85, but below the MA20 at 77.97, the MA50 at 85.49, the MA100 at 86.51, and the MA200 at 82.52. That's a classic bearish stack where shorter-term moving averages are below longer-term ones, but we are seeing a potential base forming above the near-term Mars. The daily MACD at -4.82 is still deeply negative, but the Williams percent R at -48.827 is in neutral territory, not oversold. CCI at 81.64 is showing mild bullish divergence from the price action. Price made a lower low, but momentum is holding above the oversold threshold. Here's the key insight for today. We've got a major pivot point at 78.02. That's the line between bearish continuation and reversal. Below 78.02, sellers remain in control. Above 78.02, we could see a short covering rally toward 80.60. Now the 4-hour chart shows a strong sell trend, but we are seeing the MACD histogram starting to curl higher. That's the divergence I'm watching. Price made a lower low at 76.03, but the MACD is showing a higher low on the oscillator. This is a classic hidden bullish divergence that often precedes a sharp reversal. The 4-hour resistance is at 78.02, the pivot, with support at 75.45. The 1-hour chart is where the setup gets interesting. We are currently in a strong sell trend, but the price action is consolidating between 76.03 and the previous support at 75.45. The Bollinger Bands are tightening on the 1 hour, which suggests a volatility expansion is imminent. ATR at 3.07 tells me we should expect moves of $3 plus in either direction. Here's what most traders miss when they look at oil. They focus purely on the price action without understanding the cross-asset linkages. The dollar index's strength is pressuring oil, but gold's recent rally suggests inflation expectations are sticky. And the bond market's pricing of recession risk is the real driver. When 10-year yields fall, demand expectations drop, and oil gets crushed. That's exactly what we are seeing. Let me give you the specific levels I'm watching. Key support levels. S1 at 75.45 is the critical line. S2 at 72.87 is the next major floor. S3 at 70.30 is the long-term structural support from the 2023 lows. Key resistance levels. R1 at 80.60 is the first meaningful upside hurdle. R2 at 83.17 is the weekly MA200 zone. R3 at 85.75 is the daily MA50. The pivot point at 78.02 is where all this converges. Let's talk about why oil got crushed and what's coming next. The headline is simple. Economic worries are outweighing supply risks. The 2.5% drop came despite ongoing Middle East tensions, despite OPEC plus supply cuts, despite the geopolitical premium that's supposed to be built into prices. That tells you something critical. The market is pricing in demand destruction. The 10-year Treasury yields movement is the real story. When yields fall, it signals recession fears, which means lower demand for oil. The yield curve has been inverted for months, and every time we get a weaker economic data print, oil gets hit. Today's sell-off was about global growth concerns, not supply. But here's where the narrative gets interesting. The situation is not symmetric. Supply risks are real. The Middle East is a powder keg. Any escalation, any headline about supply disruption, and oil could spike $5 overnight. The market is pricing in a 40% probability of a supply shock, and that probability is rising. The cross-asset linkages are telling me that gold's rally to new highs is the fear trade. Bitcoin's correlation with risk assets is positive, but oil is diverging. That's the recession signal. The S&P 500's struggle to hold support is adding to the negative sentiment. My 1 to 2 week directional lean is bearish with a caveat. We are approaching a support zone that could trigger a sharp countertrend rally. The risk of a $3 plus bounce from current levels is higher than most traders realize. If we hold 75.45, I want to be long for a swing toward 80.60, the event that invalidates this view. A clear break and daily close below 75.45. If that happens, we are targeting 72.87 and then 70.30. That's the structural break that changes everything. Do you think oil finds support at 75.45 or breaks lower this week? Comment support or break below. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to give you 2 scalping setups and 1 swing trade that capture the highest probability moves in oil today. Strategy 1, the opening fade, scalping, high probability. This first scalp is all about exploiting the initial reaction at the pivot point. The 5-minute chart is showing that price is consolidating just below the 78.02 pivot level. When the market opens, we are going to see a reaction to that level. The setup. Price taps 78.02 on the 5-minute chart and prints a bearish engulfing candle with a long upper wick. That's your trigger entry, short at 77.95, which is 7 cents below the first bearish close. Stop loss, 78.35, that's 40 cents above the pivot. You need room because oil has a $3 ATR. Take profit 1, 77.00 for a 95-cent gain. That's your 2.4R on a 40-cent risk. Take profit 2, 76.15 if momentum accelerates. That would be a 1.80 gain, nearly 4.5 at. What voids this scalp? If the 5-minute candle closes above 78.20, the pivot has been decisively broken and we need to reassess. Strategy 1. The opening FAD entry, 77.95, 5M bearish engulfing at pivot, stop loss, 78.35 take profit 1, 77.00 take profit 2, 76.15 risk, reward, 1:2.4 R, TP1, invalidation, void if 5M candle closes above 78.20 strategy 2, the liquidity grab, scalping, counter noise. Now let me show you how I'm trading the stop hunt below 75.45. This is where the real money is made, catching the false breakdown that triggers a violent reversal. Here's the psychology. The algos know retail traders have their stops placed below the major support level at 75.45. They're going to push price down there, sweep the stops, and then reverse aggressively. We are going to be waiting for that exact moment. The setup, price breaks below 75.45 with a long wick on the 15-minute chart, then immediately closes back above 75.45. That's the fake-out confirmation. The wick should be at least 15 to 20 cents long entry, long at 75.50, just 5 cents above the reclamation candle's close, stop loss, 74.95, that's 55 cents below your entry. You need room for the stop run, take profit, 77.00, that's a 1.50 gain, nearly 2.7 R. The target is the pivot resistance area where the shorts will be forced to cover. Warning: this setup requires fast execution. The reversal happens in minutes, not hours. You cannot hesitate when the wick appears. Have your order preloaded. Entry, 75.50, 15M close back above 75.45 after wick below, stop loss, 74.95 take profit 1, 77.00 risk, reward, 1:2.7 R invalidation, void if 15M candle closes below 74.90 strategy 3, the session swing, trend alignment. This is the trade that captures the multi-session move. Based on the 4-hour and daily bias, I'm looking for a rebound from the 75.45 support zone that can run to 80.60, the trigger condition. 4-hour candle closes above the MA5 at 75.06 with bullish MACD crossover on the 4-hour chart. That tells us the momentum has shifted. Entry, 75.65, which is 20 cents above the 4-hour close confirmation. Stop loss, 73.95. That's 1.70 below entry and sits below the S2 support at 72.87. You want your stop below the daily structure too. Avoid being stopped out by a normal wick. Take profit 1, 80.60. That's a 4.95 gain, nearly 2.9. Take profit 2, 83.17. That's a 7.52 gain, over 4.4 R. This targets the weekly MA200 resistance trailing stop rule. Once price reaches 78.12, halfway to TP1, move your stop to break even. Let the trend work for you. Invalidation level. If the daily candle closes below 75.45, this swing setup is void. We would then be looking at a breakdown towards 72.87, the session SRNG entry, 75.65, for H close above MA5 with bullish MACD cross, stop loss, 73.95 take profit 1, 80.60 take profit 2, 83.17 risk, reward, 1:2.9 R, TP1, 1:4.4 R, TP2. Invalidation. Void if daily close below 75.45. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Never risk more than 1 to 2% per trade. For these scalps, you're risking 40 to 55 cents on oil. That's about 6 to 8% of your account if you're trading one mini contract, so you need to adjust your position size accordingly. Scalps demand even tighter risk management. No positions through high-impact news. Remember, the EIA inventory data hits at 10:30 a.m. Eastern, and that volatility can wipe out an entire week of gains in 5 minutes. Stops are non-negotiable. You set them, you respect them. This is how you survive to trade the next big move. Let's summarize what matters for the next session. The single most critical level is 75.45. That's your line in the sand. Above it, we are looking for a squeeze toward 80. 60. Below it, we are targeting 72.87 and then 70.30. The pivot at 78.02 is the battleground where shorts and longs will fight for control. Tomorrow's focus is the EIA inventory data and any geopolitical headlines out of the Middle East. The risk-on or risk-off dynamic with the dollar and yields will continue to drive price action. Here's the visual cliffhanger. If this 75.45 level breaks and holds below 72.87, the entire monthly trend flips to a strong sell. We could see $68 before any meaningful bounce. I'll have the updated blueprint 24 hours from now if you want the full breakdown on trading commodities, the Aussie dollar, the Japanese yen, the euro, Bitcoin, and the S&P 500. The videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.